Without further ado, it's my great pleasure to welcome our guest, Mohammed Saif Al-Sowaidi, the Chief Executive Officer of the Qatar Investment Authority, to join me on stage. Your Excellency, thank you.
Thank you.
Thank you for joining us. I mean, it's going to be a big year for everyone, especially for investors short and long term. But how is the QIA preparing for the inflow of new money, which is expected to come in from LNG?
Well, thank you so much, Francine, for having me. Great to see you all. Thank you for your time in a busy Monday morning. Qatar Investment Authority positioning is very important. So I'll start before about the planning. The whole purpose we have of existence is to be the safeguard of future well-being of future generations. So in that strategy, we focused a lot on building a diversified, holistic portfolio that is also long-term oriented, but very mindful of short-term objectives and volatilities. As you can see, markets dynamics changes all the time. Industry disruption is an ongoing event. So it's very important for us to focus on building strong, diversified portfolio that's long-term oriented, but also very tactical and short-term focused. With the planning, for us, QIA, this is our 21st years. I think it's better. Can you hear me now?
Can you hear us? I think we could hear you before, but maybe better?
Maybe better.
And
now this is
the real thing.
There was an issue earlier. So in our evolution, we've been focusing a lot on investing actively. About 80% of what we do is direct investing. About 20 to 25% of what we do is through partnerships and fund commitments. And it's an ongoing exercise of thinking about growth. And now His Highness have elaborated last couple of years ago that a lot of the additional reserves that will come from the state, from the increase in the LNG production, will be rooted for the future generations. So we needed to live to the game. We wanted to focus more on sharpening the edges around QIA, being mindful as a long-term investor, increasing the level of specialization within the institution. We've been doing a lot of things throughout the years to be ready for it. And we're ready. And I think we're very ready despite all the changes and challenges that happens in the markets every day.
Could we see the fund do anything substantially different because of the extra capital?
I don't think substantially different. It's a large organization already. And those incremental changes will refine our conviction on how we address markets. Fundamentally different, no. But in the scale and size will increase naturally with time. But we've been thinking and visiting our philosophy as an organization a lot over the past 12 months and thinking what would be the right factors that enable us to grow systematically and be top performer and world-class investor in the world.
Your Excellency, you've announced a $500 billion investment pledge to the U.S. over the next decade. How's that going so far?
Going very strong. When you think of the U.S., it is the largest economy in the world with close to 30% of the global GDP, but it is about 60% of the investable universe. So you cannot be a long-term investor not having significant exposure to the United States. The same point of time, the U.S. enjoys a strong position, a lot of the leading sectors in the world. If you think of technology, if you think about industrial activities, if you think about defense, if you think, go on, they have strong market positioning, the U.S. institutions. The same point of time is very deep market. It's very efficient, it's very deep capital market, which enable large investors like us to have a prominent position if you wanted to progress and grow the sizing. So the deployment is going as planned. And there is a probability within the 10 years we deployed much more than the 500 billion.
How much do you worry about the short term? I mean, this Davos will be dominated by President Trump. There's been, since the beginning of the year, we've had Venezuela, concerns about Iran, and now there's the little thing called Greenland.
The short term would be very worried with Tuesday and Wednesday logistics in Davos. Longer short time, I think in this markets, as a large investor, we have to operate with both eyes open. One eye focusing on disruptions that are going on around the world. You have a tariff situation that is the highest since the 1930s. You have geopolitical challenges that are now global. You have some in South America, you have in the Middle East a couple of situations, and devastating humanitarian issues happening in Palestine and Israel conflict. And you have a major issue happening in Europe with the Ukraine-Russia situation. So those geopolitical challenges will effectively, if they prolonged, affect global growth and global inflation and global trade. The third thing, which is very important, I think, at the macro level, is the fundamental change that's expected to happen with technology. When we talk about technology, we're not referring to only the Apple of the world or the NVIDIA of the world, but I think the pace of AI innovation, if it becomes real, it will affect every industry, from financial institutions to industrials and so on. So this is in one eye what we focus on. On the other side of the equation, it's also very important to look into shorter term disruption that are happening in capital markets. And if a tariff overall is a mechanism that creates inefficiencies in markets. And the major transmission that will happen is throughout currency volatilities, interest rate volatilities, varying inflation levels around the world. So while we need to be hopeful with the disruption and innovation and be focusing on investing, on the other side, you have to be very mindful of those challenges. So difficult question to answer. We do it through multiple things. The first thing is that investing in talent. I'm very proud to say that within QIA, we have some of the best talents globally. We're focusing a lot on specializations, and we're focusing on growing up a lot of the talents that we have on the younger side of the institution. The second way we try to manage this is through strong partnerships. Large financial institutions around the world, large fund investors, and et cetera, and many times, not corporates. And many times we would align on alignment, but occasionally you'll have conflicting views on markets. So we have to have strong partnership that we trust and can challenge us when they're wrong, and we challenge them when we think they have misperception. The third thing we're focusing on a lot is active risk management and proactive management, because you could be very long term, but by the time long term happens, I'm already retired. So we have to focus on being long term focused, but very short term aware. And it's not easy because market dynamics never stop, and you have to test yourself and be humble to really focus on strengths and weaknesses in your portfolio and see how we deal with them.
Is it fair to ask what would be more disruptive, geopolitics longer term or AI?
Personally, I think AI. I think, I mean, geopolitics is a major, really driven by economical. It's very interesting. We look into the history. A lot of the global wars, unfortunately, had an element of trade. But I think with time, prices set at the right equilibrium at some point. Now, it's inefficient as well, because sometimes you push up prices up and you don't really de-inflate them. They can continue to be up and later on eat up in growth of those economies. On the AI space, it's very interesting. I think the revolution in AI and as a new industrialization form is real. Mm-hmm. But we have to be patient. Each significant uplift on the industrial revolution taken 30 to 40 years to materialize. You look at a recent example. If you look into Amazon, which was listed in 96 or so, only became profitable in about 2003, 2004. The size of revenue grew from 20 or 11 or 15 million to later on about 5 billion in 2003. And continued to grow. But at the same time Amazon came up, a lot of players also came up. The players that were not successful on thinking about vulnerabilities in your business models and adjusting them have left the market. So the thing we worry about in innovation AI, it's short-term heat. The thing which we worry about AI is businesses that take momentum trades versus actually building business models that fundamentally prove to be valuable over the long term. But the whole purpose of revolution in the industrial space is really to increase the level of productivity. So what we yet to achieve and observe very openly is that AI would actually bring fundamental growth on the level of productivity. And you will find economies that don't really utilize AI in the right way, or industries, they will fall further behind. So it's a long-winded answer. I think geopolitical risks are real, but I think ultimately over the long term, the more fundamental drive to the future growth would come from AI overall. And the integration of AI, and AI is really not a lot of the, I mean, there's my technology team, I have the best technology team, I think, within various institutions, and they have very fundamental views. But generalists, if you think about it from a general perspective, there are very simple things that create productivity. And there is very complicated things around the agentic AI and the robotics coming against the world. And human always tend to not have limits and expectations. But even if you think of the bare minimum of improving productivity globally, there is a big one, which AI would enable to happen.
So if we talk about AI valuations, first of all, can you tell the winners and losers today of AI in terms of companies?
Well, I wish. I mean, we knew it would do. We would put all our commitments. At QIA, we go by conviction. So we don't follow a strategy overall of spray and pray on those things. We focus on having deep research and building predictions, and ultimately have high conviction calls. I think materially, some of the players will materialize much recent than others. We are large investors in Anthropic. We are a large investor in XAI. We are a large investor in Databricks. And we're investors in other businesses that are smaller in scale, but very fundamental in value. The team invested in Crystal AI, for example. Crystal AI focuses on optimizing and human augmentation of call centers. I think none of us want to be in a call with a call center for long. So it's actually real productivity. And I think the people would be on the other side would focus on more specialized and complicated requests versus the small requests.
How do you view companies adopting AI? So one of the trends that we're seeing is many chief executives spending so much time and money on AI that maybe it also means they have less entry jobs because they can't afford more people at the moment.
What I'll tell you for sure is no one knows the real answer. No one the real answers of really utilizing AI the right approach. You have some institutions that will very forward-looking and focus on a lot of implementations that ultimately didn't really provide value. So there's a lot of optionality. But the most important thing that's fundamental for any implementation of AI is you have to have good data. So any business that does not have access to good data with what they do and conduct in their daily operations or their long-term strategic thinking would not be able to impose AI solutions in an efficient manner.
When you look at the sectors that you're focusing on or the areas that you're focused on for 2026, is it AI and something else?
When I say we over the long term, we have a well-diversified portfolio. But what we've done last year is we've increased the level of tactical asset allocation. So in 2026, will be the large focus on AI that materialized and continue to grow. After 5-6 years of building a business, by that time, you should have a view on revenue projections and implementation and value add to productivity within those businesses and users. So those businesses are businesses will back more significantly. But the intersection between AI and in other industries is very important, is as important. Financial institutions, for example, are a large beneficiary of AI. Those who use AI in the right way will be able to be more efficient, have less compliance staff, for example, have faster processes in evaluating of customers. Industrial businesses is a major actor. I think when you think of a global geopolitical situation, we're definitely not in a position in 2001, 2005, where we are pro-global trade. Regardless of the scenarios, the best case scenario would be a calm environment with regional trade. So the only way for businesses in the US or Europe to be productive and match the efficiencies in China is actually by implementing AI to be more efficient. So financial institutions, the industrial space, and other businesses around them. So we always had a long focus on minerals and commodities. Last year, we've done a few transactions in that space. Data center is a big area of focus for us as well. Last year, we've closed in a few transactions, largest transactions in the US and globally. So the flavor of 2026, I think, is mindful of short-term volatilities and how we optimize the book and focusing on technology innovation going forward and trying to test our predictions, which we had a couple of years ago, and how businesses are doing. And then perhaps focusing on other industrial businesses that could be the best beneficial of innovation and technology.
I think the QIA also recently backed Carlyle and buying some of the BASF assets. Can we expect the fund to do more in these larger buyout deals?
Very interesting transactions you've done. And it's a business that we've been looking at for some time. Yeah. But we went on a sizable position because we believe that in businesses that have dominant industrial positioning, global disruptions could actually be favorable. So this is one of the largest, it is the largest coating, specialized coating businesses on aviation, automotive, and very specific applications globally used. And the purpose of this was to take advantage of change a large business like BASF thinking about running a more efficient balance sheet and carving out an encore business and investing beside Carlyle, who have a very strong team in the industrial space. So the purpose we have there is investing on a curve out, growing the business with Carlyle to have a more dominant global position.
What are the QIA's priorities when it comes to local domestic investing?
QIA, one of the pillars of QIA is to support the diversification and growth of the domestic market. You may note about two months ago, we've launched QIA. That's Qatar AI. The business will focus on building data centers and services and applications around them. It was launched 2 months ago, and I think soon they'll be announcing very good transactions what they're pursuing on the data center space. So it's a fundamental, Qatar economy has matured and specialized, and what QI is doing now is mostly focusing of how to empower the domestic economy more than interacting a lot with the domestic economy. And there is a lot of ideas that are coming in the pipeline, which will have a positive impact. So it's one of the pillars of QI's focus.
All of the Middle Eastern sovereign wealth funds are trying to attract the best talent from the West and elsewhere. What's your pitch, actually, so that they come and work for the QIA and not some of the others?
The Middle East is an interesting neighborhood. It's very centrally located. Qatar is one of the safest countries in the world. Qatar has a very good education system and health system, and it's actually a beautiful place to be in. I mean, I go around the world every day, but there is nothing that matches the landscape of Qatar. It's a very safe, very welcoming culture. And by the way, we have within QIA people who came to QIA about 20 change years ago, and they're still there. And now their kids want to come back and work in QIA or Qatar. It's a very safe location, very intellectually stimulating when it comes to technology venues that we have in healthcare. So it's a beautiful place. And also Qatar is very big in culture. So I think in this world we miss, as people grow up, not being materialistic, focusing on culture, focusing on education, focusing on sports. And Qatar ticks the box in all of them. You can't really find any better place.
What are you most looking forward to in Davos, apart from the traffic that we're expecting from tomorrow that no one is looking forward to, or the cold? But do you think it feels like a different Davos? I think it's your 10th Davos. This year feels dominated by geopolitics. How do you cut through that?
It's a big, it's the peak. The tension, a lot of proxies says that the level of tension hasn't been at this level. We have conversations in Greenland, we have conversations on China, and US, and Europe, and Middle East. So it's very important for leaders. I hope it's a good time for leaders to get together and find deadlocks. At the end, Qatar's position and His Highness' position always is resolving issues through communication. Qatar has been a diplomatic force when it comes to this. We believe that there's no solution other than diplomatic communication and facilitation. And Qatar is very proud to be strongly positioned there. So I hope there is more communication toward better peace. At the end of the day, we believe on peace and prosperity because this is the only way to build hope on the younger generation. If we don't want to look into ourselves in 40, 50 years, if we're still alive, and we say, well, we didn't do nothing about it. I think all the global leaders, they need to focus on communication, how to find a win-win situation. And many times, if you look at it, mathematically, there could be a solution, but we need to be open for it. In a world, there is a lot of polarization and very aggressive views. So as a QIA, we think there is a very interesting Chinese proverb that goes, and when the winds of change come, some people build walls, others will build windmills. So we're trying to be proactive, flexible to some parts of the portfolio, very mindful, and trying to take opportunity of the short-term and the long-term fundamental changes around the world.
I'm sure you're maybe meeting some of the U.S. delegation. What would you ask them?
It will be very short meetings. But I mean, to be fair, a lot of the directions the U.S. has is it's like a lot of them are actually positive for the U.S., but some of them are questionable. Some of those decisions could be very costly. Like if you think of the tariff and the position around tariff, it could actually be very costly in the consumer of the United States. But I'll be asking them, I mean, I'll tell them, let's cool down, let's focus on growth and prosperity around the world.
Thank you so much. Thank you for your time. Let's end it there. Mohammed Saif Al-Sowaidi, they are the Chief Executive Officer of the Qatar Investment Authority. We can give him a great clap.